Oh boy, here we go once again. According to some right here, Tesla will be at over $3,000 per share, Palantir is going to be over $500 per share, and even Sofi will be at over $300 per share much sooner than anybody else thinks. I mean, it is right around the corner. Now yes, I agree these are all great companies who I think will be huge in the future, but are these prices even realistic? Well, I gotta be honest with you guys, there are some very uncomfortable truths with all of this that you need to hear and understand. So just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. Even if it's a little bit hard to hear, that's exactly what you're going to get. So I'm going to discuss each one of these stocks individually. And yes, the uncomfortable truth about all of it is coming as well. But that uncomfortable truth is your key to your success in your investing. So make sure you stick around for that. Now, to be clear and upfront, I own all three of these companies and I have no plans to sell any of them. I am actually bullish on all three companies. And I would love for all of this stuff to be true, all these price targets to be true, and everything else. But unfortunately, guys, I don't live in fantasy land that some folks want to live in the past few years. And that has gotten us, that fantasy land has gotten us as retail investors wrecked over and over again. I don't invest in hype. I invest in fundamentals. Now, that doesn't make me a bear or a non-believer. It makes me a prudent investor in the end. And I have a full position plus bonus shares in all three of these stocks, and I will buy more shares in the future of these stocks as well. So that to me is what a prudent investor does. So clearly I own the company. Clearly I believe in all three companies as well, or else my money wouldn't be there in the first place. So let's get to the truth with all this. And we're going to start with Sofi first. Sofi going to $300. Now, putting all the Sofi drama in the retail community, which I addressed in my group. I mean, those videos are not for public consumption. I promise they're just a bit too much to be putting out here on YouTube. But putting all that stuff aside and its ridiculousness, all the craziness aside for just a second here. I love Sofi, but I don't see Sofi sniffing $300 per share unless we are talking about basically a decade plus down the road. And even then, it's not as likely as you think it may be. Basically, as they move further into traditional banking and all the different barriers that it brings, the growth rates are going to slow just naturally over time with any company as they grow. And the multiple will also come down as well. Now remember, they just turned profitable just a little while ago, and we have no idea yet what multiple Wall Street will land on for them. And that is key to the entire bull thesis. And yes, unfortunately, Wall Street controls all of that, not us. I can create whatever multiple I want. It means nothing. Wall Street will determine it in the end. Now, I personally believe, just my opinion, that they get a hybrid multiple of some sort, basically in between a bank and a fintech multiple, which is very reasonable in my opinion. I feel like I'm being conservative with that, and I'm not going over the top with that sort of stuff. But I can take the numbers, give it a full fintech multiple, and it's still going to be very hard to hit that price target 10 years from now, much less 3 years from now, like some are saying and are predicting out there. I love the company. I've already made a ton of money on the stock already, and this stock is going to make me a lot of money in the future in regards to owning this stock. But the numbers being thrown out there before the temper tantrum breakdown that some had over the earnings was simply pure speculation and to be completely ignored and should not factor into your reason for owning Sofi stock at all. So next up, let's cover Palantir since it is absolutely different than Sofi. And of course, the uncomfortable truth about all this as well applies perfectly here too. So we'll get to that and Tesla as well here in just a second. Palantir to 500. All right, Palantir is clearly on an epic run right now. And I'm not here to discuss that run or anything else involved in that. I'm sure we'll discuss that at a future point in time. Obviously, I covered it this past Sunday as well in regards to that. Talk about that some other time here. But looking at Palantir and looking at $500 per share, it can be a little bit easier to project out Palantir and to see, is that realistic or not? Because Palantir is making a nice profit that you can project out. They gave us nice guidance and everything else. So it becomes a little bit easier to project out. But the growth rate is tricky with Palantir. And ultimately, will Wall Street reward them with a reasonable multiple once all the AI hype kind of dies down and everything kind of settles back to normal? Right now, it's sitting at a forward multiple of around 200, which guys, I'm sorry, I know this doesn't fit the narrative, but I don't believe they will get that same multiple in the future as they grow and mature. Matter of fact, I believe a multiple of 60 is much more reasonable if the future growth, basically if they continue that future growth at a 30% clip or so or higher, which basically when you do that and then you look at that $500 price target, that makes it much harder to hit in such a short time frame that some out there are predicting in the next 2, 3, 4 years or so. That's what they're predicting out there. I'm sorry, Wall Street hardly ever pays multiple as high as it is right now for a sustained period of time. So banking on that is not prudent at all. I mean, hey, great if it happens. I stand to make a ton of money, but that's not the most likely scenario. Now, I'm incredibly bullish on this company, but we have had a lot of earnings growth already priced in at this stage. Now, on the flip side of that, the good news is they have unlimited demand and can scale quickly, which absolutely helps, but probably not as much in that short of a time frame. I mean, you want to stretch the timeline out? Okay, maybe $500 does become feasible at that stage. However, I have to be honest and say whenever I do something like that, that is pure speculation at this point. So it's not even on my radar to do, nor is it on my radar to count on or to make decisions today what I should do with my stocks. It just doesn't, because at that stage, I am purely speculating. And finally, we have Tesla to 3,000. Now, I'm going to approach this one a little bit different because I want to address one of the major arguments that I hear all the time. Actually, a couple of them that I hear all the time. Let me be very clear about this point. Speculators are always right every once in a while. But someone who always wins the lottery doesn't prove that lottery and playing the lottery is a good investing strategy. So simply because somebody made a speculative prediction in 2018 or 2019 or whatever it was, and it came true, doesn't mean their next prediction will be right as well. And as we have seen with Tesla, they have all been remarkably wrong since those initial predictions back in 2018 and 2019 or whatever the case was. The 2021 predictions, they were all way wrong. Same with the 2023 ones, and I suspect the latest ones will fall short as well. All of those people making crazy predictions are basically like making predictions on a baseball player who hits a home run on his first at bat and then strikes out the next, 5 times up to bat. But yet people still think they are more likely to hit a home run every single time they come to the plate because, that one time they did it that one time. Tesla, unfortunately, is the ultimate example of speculation. And once again, it will bite retail investors if they don't stay grounded in the fundamentals. Now, sure, you can say, I don't understand FSD or Optimus the same way you do. That may very well be true. It's really, really hard to judge, but I'll just concede it. Hey, that may very well be true. But I do understand stock investing and how the market responds to it. And I have been remarkably right about the stock investing side of it. I said, don't buy in 2021 when Tesla to the moon, right? Everybody was wanting to buy it at $400. I said, don't buy it. Why was everybody saying that? Why was everybody saying Tesla to the moon? Because of speculation, like FSD is next year. I don't know if that sounds familiar or not, but that was the speculation back then. The Cybertruck will be the best-selling truck in 2 years. Well, didn't even produce the first one in that 2-year time frame. And every car will be a Tesla, which obviously Tesla is making great inroads, but that's clearly not true. Every roof will be a new Tesla roof, and on and on and on. Everybody that was speculating put out there as the reason why that's what was going to happen and why Tesla was a bargain at $400 per share in 2021. As a stock investor, all that stuff sounded awesome, but the fundamentals and valuation told me not to buy because it was crazy overvalued at over 1,000 PE at the time. That's what the fundamentals and valuation told me as a stock investor. And then the fundamentals and valuation and everything else told me to buy Tesla big in 2022 through 2023 because of those same fundamentals and valuation. So while other folks were busy buying it at 400, we were busy buying it, at 200, 180, 150, all the way down to $100 per share. That's what the fundamentals told me to do during that time frame. And then once again, those same fundamentals and valuation told me to lay off on every hype run in 2023 when Tesla was going to the moon again. And even last year when those narratives once again popped back up. But those same fundamentals told me to buy at 141 and 169 last year when the valuation and fundamentals were looking really juicy once again. That is the reality of this journey with Tesla. And more importantly, my understanding of stock investing. I can 100% believe in Tesla. I can believe in FSD, believe in Optimus, and believe in energy while simultaneously utilizing a strategy that is not based on speculation, but solid investing fundamentals. Stock investing is just different. And that's hopefully what the folks that are watching this channel and don't want hype, they want the truth without the hype. Hopefully they're seeing that, and it has proven out over time. That is the truth with stock investing. Now, the other piece of that is I have no clue why people get upset or think that I have no idea or that I shouldn't own Tesla, because I constantly buy low and hold the stock and then enjoy the runs up where I make a ton of money. Like, that is literally the point in investing, to buy a great company at a bargain price so you make more money. That's the point in investing, not speculating and getting stuck buying shares that will not make you near the amount of money that I will make in the same exact time frame by buying low versus buying high. It makes zero sense to me to buy based on speculation when you get great opportunities to buy at great valuations if you were just patient and stick to those fundamentals. I didn't have to speculate one time to buy probably, I don't know, 50 plus batches of shares of Tesla over the past 5 years. Not one time did I have to speculate or use crazy projections or anything else to buy Tesla at a great price. But sadly, many people believe that you do need to speculate in order to be a good owner of Tesla stock, and that is just simply not true. I got it. When you look back at 2021 now with hindsight, it seems completely obvious. But during it, when it was going on, many failed to see it, and it's starting to feel like that's happening once again. But this uncomfortable truth about investing has proven true over and over and over again, so you can count on it 100%. So what is the uncomfortable truth about investing? All right, you can make projections out to next year. 2 years out, yeah, especially if management guides to it, it's a little bit more, shady per se, but still very reasonable. 3 years out is real murky, and you're really just kind of guessing at that stage. 5 or 10 years or 2030 or 2040 is utterly useless speculation. It is literally the worst thing to use to look at an investment decision today, and I'll show you exactly why. Matter of fact, we'll start right there with Tesla, because it is a great example to illustrate and prove this point and show you exactly why all these models and all these charts and graphs and everything else that go out 5 or 10 years are pure speculation, and how flawed all that speculation is, regardless of what stock you apply it to. You can apply this to anything. We're just using Tesla here for this example, but you can apply it to any stock. When Tesla was at $400 in 2021, how many people who were bullish on Tesla modeled out on their pretty little spreadsheets and, models and all that other goofy stuff like that, how many of them modeled out Tesla to $100 just over a year later? My guess is nobody did that, because I went back and I looked and I found all those old projections, and they were basically at Tesla would be at $800, $1,000 per share, $1,500 per share, and some higher than that. And yes, before you go down blasting me down in the comments, I adjusted those numbers for the stock splits, so the numbers were actually much higher than that. I've already done the adjustment for you. You don't have to. That's how crazy that's what those numbers were. And let me tell you exactly why modeling out that far is utterly useless in the end. And basically, you cannot model out human behavior per se, right? You can't do it. You cannot model out almost 10% inflation. You cannot model out the fastest Fed raise in the history of Fed raises. You cannot model out Elon's Twitter activity, or him deciding to buy Twitter, or him diving into politics. That doesn't fit into a model. You cannot model out Cybertruck being harder than expected and taking years more to roll out than it did. And you cannot model out the demand for Cybertruck either, just like you can't model out geopolitical events. You can't model out any of the variables that happen every single year that make models useless when you try to speculate 10 years, 5 years, 15 years, whatever, into the future. Don't base your investing decisions on those speculative numbers. Base your investing decisions on solid fundamentals like valuation, and if it's undervalued, you buy. And if it's overvalued by too much, you don't, and you keep it that simple, or you simply just DCA into the stock to where none of that stuff matters. You're buying high, you're buying low, you're buying everywhere in between. Hey, maybe you keep a little side pool of money to kind of, as it goes undervalued, you obviously DCA heavier during that time. But those are the strategies that win over and over and over again, statistically proven strategies that win over and over and over again. Back in 2021, the spreadsheets all said buy Tesla at 400 and the models and everything else. The fundamentals said great company, but the multiple said ridiculously overpriced at a PE over 1,000, and so you should not buy the stock. That is why fundamentals always win over the long run, and keeping it simple, and all the speculators eventually end up losing because they are speculating. We are investing over here. Now, to be very, very, very clear, I want all these companies to succeed to those levels. I will see my wealth grow to stupid levels if they do. It'll be incredible. But there is no need to speculate like that and base current decisions on models, spreadsheets, and assumptions that are a pure guess because they may lead you to ignore fundamentals like a PE over 1,000 to buy a stock. That may very well be exactly what happens in the end, and you don't want to be in that spot. I agree, some of those charts and graphs and all that sort of stuff, they're fun. They're kind of cool. It's kind of cool to dream. But the only way to avoid trouble and buy when it makes sense is to stick to your fundamentals and avoid speculating beyond what you can reasonably guess, which at that stage, when you're looking at numbers, it's basically the next year, maybe the next 2 years. That's basically as far as you can see in regards to making an educated guess on what's going to happen. Anything else beyond that, you're getting well into speculation. And obviously, the further out you go, the way more you're speculating. So in the end, I don't like to do that. Stay away from speculating. Stick with those fundamentals and valuation, and you'll be just fine. And if you don't know how to do that, you don't know how to do a valuation, you don't know how to understand what fundamental investing is, make sure you check out the pinned comment. I may have left something special for those of you guys that hung around this long, where you get 5 courses for free. You get access to free coaching. You get to be a part of the best 6, 7, and 8-figure Discord out there. Guys, there's so much involved in the group. Make sure you check out the pinned comment if you want to learn this and you want to learn it intimately and have folks help you learn it, apply it to your plan and everything else. Check it out. It's the pinned comment down there. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.